Interest-only loans are back. Is this a good thing or a bad thing? All right, here's the scoop. We see home loan products come and go, especially some of these kind of nuanced or niche products. They'll come into the market and then they'll leave the market. Some programs never come back, like the no dog, no income, no anything type of programs. But interest-only loans are making a comeback. So today I'm going to kind of walk through really the pros and cons so you understand what they are. And if you're talking to a lender that is presenting one to you, you know the backstory. And also, if you're talking to a lender and they're not talking to you about interest only, then you certainly can ask about it. So here's kind of how they work. The interest only is just a payment feature on the loan itself. The interest only payment would be for the first 10-year period. And then the interest only payment goes away, and then that payment converts to a principal and interest payment. Now, this is just an example, and realize there's going to be a lot of variation out here, but that's the most typical type of loan. Now, you could also see an interest-only payment feature on a hybrid ARM. And a hybrid ARM, as a reminder, is an adjustable rate mortgage that has a fixed rate component to it. So it would be, for example, let's say it's a 7-year ARM, and after the 7 years, the interest rate on the loan starts to adjust. We see those programs also tied to an interest-only feature in some cases. Now, it could be a 7-year interest only, so then the interest rate and the payment is changing after the initial fixed rate term. Or we also see it where you see the fixed rate, for example, the 7 years, and then the rate starts to adjust. But the interest only could still be for a 10-year period. So understanding really the foundational elements of these programs is really, really important. Okay, so when we think about the pros are you're only paying the interest portion of your payment. So there is no principal paid unless you are intentionally paying towards principal. Now, that could be a pro because it could create some affordability or some cash flow for you. But on the other side of the equation, it could be a con because you are not focused on paying the principal down. So if we think about it, let's say you're borrowing X dollars and for 10 years you pay nothing towards the principal, then at the end of that 10-year period, you still owe the same principal amount that you borrowed because you haven't paid anything towards the principal. These programs were designed to create flexibility based on whatever's going on in one scenario. So for example, if you are self-employed or you are looking for kind of a short-term type of scenario, maybe you're relocating, you know you're only going to be in that area for 2 to 3 years, and you know that you're going to be getting a large lump sum on an inheritance, or you're purchasing in an area that has a high appreciation rate, all of these could be factors on why you might consider an interest-only loan. Now, on the con side, I have been around for a while. And so I recall the last time interest-only loans were very popular in that 2004, 5, 6 types of time frame. We had people that entered into an interest-only loan program and were not able to refinance out of the program. And so when that true principal and interest payment came due at the end of 10 years, they had what we call payment shock, meaning that they were not in a position to pay the principal interest payment. So I think that really kind of walking through it, get the facts, understand how interest only works, be really certain about how you're going to manage this, because this is a mortgage that needs to be managed. And understand that at some point that interest-only payment feature is going to go away. So are you prepared to be able to pay the principal and interest payment once that goes away, if by chance you can't refinance for whatever reason? Also, it's important to know that the interest rate on these programs is generally higher than what you might find on Fannie Mae, Freddie Mac, FHA, or VA loans. So this is more of a niche product. Interest rates are higher. And with that, you may see more strict guidelines from an underwriting standpoint, simply because it is a unique program and lenders want to be sure and must be sure that you understand how it works and that you're in a position to manage it. Going back to the pros, one thing I failed to mention that's really helpful and with this loan is that let's say you are purchasing a home and you are either doing estate planning or maybe you're going to be liquidating other property, or again, you're coming into some additional cash. That's your intent to take that money and apply it towards your principal. The cool thing about an interest-only loan is that you can do that. So for example, maybe you take out the loan and it's X dollars on your loan amount day one, and in a year from now, you are selling a property. You want to take the proceeds of that property and apply it towards your principal. Then you can do that without having to refinance, without having to recast. This is your loan to be able to manage. You go back to the bank, you give them the principal, your principal balance reduces, and then your interest payment also reduces. So those go hand in hand with each other. So again, a lot of flexibility. If you guys have questions or you want to pursue, does interest only work for you? Feel free to reach out. You can call or text us at 480-725-0150, and a Kelly Zitlow mortgage advisor will be sure to kind of walk you through, ask the right questions, and educate you around the program and see if it's a good fit. We'll talk to you soon.